What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we saw the Nasdaq 100 leading the way with the Russell 2000 actually dropping lower for the day. Is money rotating back into the tech sector? First up, we'll take a look at the Nasdaq 100 Qqq ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, on the Qqqs, the price action went up 1.75% today, and that's another price action close back above the 50 EMA. Remember that the first step to reversing a bear trend, which the Nasdaq 100 is coming out of a bear trend, is we need to see price action closing back above all of the moving averages. We started to get that look last week, and then we had the quad witching sell-off going into the end of the week, and we were back below those moving averages. So it looks like this is a strong Monday price action because we're back over the moving averages, and we want to remain over the 50 EMA. That'll allow the trend to go back to bullish while the price action continues to close higher. So the number one level we need to watch right now if we're bullish is the price action to continue to close over top of this 50 EMA, which is right around Qqq's levels of 317. You can see we're slowly getting some bullish trending with the 5 EMA struggling to try to break back above the other moving averages, but it does look like we're starting to pivot from a bear trend to the beginning early stages of a bull trend. Remember, if you've been following my channel, I do think that we're going back into a possible 5 waves to the upside, but we need the price action to confirm that we're going higher with these waves. Now, the strongest way to know the price action is going higher is a price action close over Qqq levels of 324. That's the previous daily highs that if we do start breaking over that level, will form higher highs on the daily chart. Remember that bull trends consist of higher highs and higher lows, and as far as we know, we're starting to form a higher low. We just have yet to form that higher high. So let's go ahead and jump over to a 1 hour chart so that we can see this better. And we do see that we likely finished out this 5 waves here, which completes the bigger wave 1 on the daily chart. We now have the ABC structure to the downside, which could have completed wave 2. So what we're looking at here is a possible completion of wave 1 and wave 2, which means we're well on our way into wave 3. Wave 3 is usually one of the best waves in this structure, which means there's a lot of potential profits in the Qqqs on this move. Now, of course, in the stock market, you can't make money without taking on risk. So the wave 2 is usually the highest risk because you're not quite sure if you're in this wave 3 structure until you get a price action close over that high of wave 1, which is right at that 324 level. So if you took on risk down here in the 310s, you've already had quite a bit of rewards. And the question is, are you going to continue to hold that for a possible break of 324 or potentially risk losing some of those profits if this is a fake out and we start going lower? Remember, this is a crossroads in the market, and I'm not going to pretend to tell you that I know the market's going higher or lower. My educated guess is that the market wants to go higher because if you watch my Sunday video, you see that on the higher degree charts, which are the weekly and monthly charts, that we still have very strong bull trends. So on the daily chart, you can see that we're starting to form a possible early stages of a bull market, but we haven't quite got the confirmation yet. That's why I like spending time on the 1 hour charts because we can see a lot more price action because we get a lot more data on a 1 hour chart. However, this data is no good if you're using it the wrong way, and we still need to see that price action close over 324 to be completely bullish on the Qqqs. Now also take note that we did gap up over 315 today, which means it's still possible we come down and close that gap. I don't think that gap has to be closed if we're going into a bull market, but if we're not going into a bull market, that would be the number one area that I think we should watch for a possible pullback into that gap. Now on the 1 hour chart, you can see we're going into a bull trend and we are forming higher highs and higher lows, but we're currently in the process of forming lower highs if we fail to break out above 324. So this is going to be the ultimate test this week. We will likely retest those levels at 322 and 324, and if we fail to break out over that level, that will be a bearish sign, and it means we could be getting rejected at these levels and we're going lower. Now, another thing I want to point your attention to is this inverse head and shoulders pattern that I talked about on Friday is starting to play out exactly as planned. You can see that we did form the left shoulder, we formed the head of the pattern, and now we're currently in the process of forming this right shoulder. And you can see with the price action that we're nicely climbing up the right shoulder. And if we do get a breakout close over the neckline, that would bring the Nasdaq 100 to new all-time highs. So that neckline is somewhere around 13,300, and I've showed you that neckline on the Qqqs is right around 324. So that's the level you want if you're waiting to get bullish on this market for a confirmation breakout. That's the level you're waiting for. If you want to take on more risk, then you should have been buying low, assuming that the market would go higher. That's a riskier trade, but as you know in the stock market, if you take on more risk, it is possible that you could make more reward. Obviously, the more risk you take on, the better your risk management needs to be. So always make sure that you have an exit strategy. So right now, the exit strategy would be a failed breakout of this neckline, but if you're taking on risk at this level when I showed this pattern, you knew that your risk was to the downside on a break below support, but your potential reward is a nice run up all the way to the neckline. So that's how I set up this trade with the risk reward, knowing my risk is below support and my reward is at the critical resistance level. So this trade is still in effect until we fail to break out at that neckline once we finally do attempt to break out at that level. Remember that this pattern has no guarantees unless that neckline breaks, and even then there's no guarantees in the market. If that neckline breaks, it only significantly increases the probability of bullish outcomes, and it would mean that the market would likely want to run to new all-time highs. This is a very basic pattern that means buyers are stepping in, causing the market to go to higher lows and higher highs. It's a typical bull pattern, and it's not magic, and it's nothing that you couldn't have seen without knowing this pattern, because if you're watching for higher highs and higher lows, you're still going to recognize this bullish formation forming. The significance of this pattern is on a break of the neckline, we would travel the distance from the neckline to the bottom of the head, which is what tells us that we would likely go to new all-time highs. So going back over to the triple Qs, it's still likely that we're going back up to test that neckline around 324. And if we're bullish and we break through that level, it means the stock market could have a lot more upside and we want to be a part of that move. Now to the downside, we strictly just need to watch the critical support levels at 313, 310, and 307.60. If those levels start breaking down, we're going to start forming lower lows, and that significantly decreases the probabilities of bullish outcomes, and we're going to start looking at bearish scenarios. So right now, I'm bullish on this market, and I'm going to remain bullish on the market as long as the triple Qs can stay above this 307.60 level. We've been above this level ever since I got bullish on this market, and we have been buying the dip on support levels and selling at resistance levels. The reason we're still selling at resistance levels is because we're not confirmed to be in a bull market until we see the daily chart go back into a bull market. We don't use the hourly chart to dictate a bull market, we use the daily chart. So we can still trade in an hourly chart, but the point of trading this chart is to sell at resistance because we don't want to get too bullish to the long side while we're still in a downtrend. So let's jump back over to the daily chart and zoom in here, and you can still see that we're in a downtrend. The 20 simple moving average is negatively sloping, and none of these moving averages are currently in trend mode. So we don't want to get bullish on a market that is not currently trending in a bullish pattern. We want to see a bullish trend before we get too long on this market, and we want to trade the chop in the meantime. So chop is exactly what you see on this chart, where the price action is just going up and down and up and down. That is a great environment for a trader because it means you're constantly getting entries and exits, which means you could make a lot of money as long as the market's just chopping around. Once the market goes in trend mode, we want to be a part of the trending move, and we want to go more into a long position and try to capture the majority of that run. So right now, the critical resistance we're watching is 324, and the critical support we're watching is still down here at 307.60. If you want to be a little more of a conservative bull, you would watch 310 as your critical support, and if we break below there, you would exit. Next up is the S&P 500 Spy Etf, and we saw Spy going up 0.80% and closing back above the 5 EMA. We did come into that critical resistance level at 394, which was our previous all-time high back here in February. We can still see that the S&P 500 is still in a bull trend, and the price action and the trend are still bullish. So that favors the likelihood that the S&P 500 bulls will break back above 394, which could bring us back up to the previous all-time high at 397. Remember that 397 is not a price target until we can break and close over 394. So don't get too far ahead of yourself, and make sure if you're trading this market, you're still selling at the immediate resistance as long as you don't want to take on too much risk. If you're willing to take on more risk, then you're willing to hold your position longer for the potential possibility that we go to the next price target. If you're trying to reduce your risk, buy at support and then sell at the most immediate resistance levels. And don't forget that I'm giving you these levels on the Stocks Channel Discord. If you want to still trade this market without taking on risk, then make sure that you're selling at the most immediate resistance levels and not getting too greedy. If you're willing to take on more risk and potentially hold out for new all-time highs, then you're looking for breaks of these resistance levels to know that you can hold to the next level. If we continue to fail to break out over 394, you're still getting greedy if you're holding that position, because failure to break above resistance is not a bullish indication. The critical support levels on SPY are still the 20 simple moving average, which is still down here around 389. If we break below the 20 simple, it's very likely we're going to come down and retest the 50 EMA, which is currently sitting around 384. So as you can tell from the S&P 500, we're still in a bull trend and the price action is still looking bullish over all of the moving averages. So we still want to have a bullish bias on the S&P 500. Next up is the Dow Jones Etf, and we saw the Dow going up 0.38% today and closing right at that resistance level around 327. On the Dow, we still have a bull trend, and the price action is trading above all of the moving averages except for the 5 EMA. If we break above 327, the next price target we want to watch is the previous closing all-time high around 331. A break above that level should bring us up to our price target at 336. We do have support levels on the Dow at 322 and 320, but a break below the 20 simple moving average at 320 means we'll likely retest the 50 EMA at 315. Next up is the Russell 2000 ETF, and if you watched my weekend video, it should be no surprise that the Russell 2000 was down today because it got way too far extended on that monthly chart and it needs to cool off. We saw the Russell going down 0.75% today and closing right on top of that 20 simple moving average yet again. So the Russell is weakening, which is no surprise because it went way too far and it could even possibly go through a correction. We saw this happen with the tech sector, where we saw the tech going through a big correction and a big sell-off, even though the Dow Jones and the Russell 2000 continued to go higher. So it's completely possible we now see the Russell 2000 going into a correction while we see the tech sector going higher. Remember that there's no infinite money in this world, and most money is just moving around. We see people selling the Russell 2000 and buying the tech sector, just like we saw people selling the tech sector to buy the financials and industrial sectors. Money isn't being created, it's strictly just moving hands, and the wealth is not being generated, it's just swapping around the market. So I would not be surprised to see the Russell 2000 continue to show weakness if we continue to see strength in the tech sector, because it means people are likely selling one sector in favor of buying another sector. So the critical support on the Russell 2000 is this 20 simple moving average at 224. And if we break below there, it's very possible we're retesting the 50 EMA down at 218. Upside resistance levels are 227. And if we can break and close over 227, we're likely going back up to 233. Next up is the Arkk ETF, which unfortunately for the bulls is still looking bearish. The price action continues to fail to break back above resistance levels, and we're still trading below the 20 simple moving average and the 50 EMA. You could see the price action did get rejected intraday at the 20 simple moving average, and all of these moving averages are still stacked to the bear side, and it looks like we're still trending lower. So in order for Arkk to get bullish, we need to see price action closes over the 20 simple and the 50 EMA. There's still quite a ways to go because the 50 EMA is up here at 131. So don't get overly bullish on the Arkk ETF until we see the price action and the trend return to the bull side. Right now, you're better off being an Arkk bear because the trend and the price action are favoring the bear scenario. Downside support levels are still 117 and the support trend line is now around 113. Upside resistance is going to be 125, the 20 simple at 126, and the 50 EMA at 131. Next up is the VIX, which is the fear indicator, and we continue to see the VIX point towards bullish indications. We saw the VIX have a little bit of a dead cat bounce after we got two closes below 20, and then we were back up to resistance at 21.6, which did hold up, and now we're back to closing below support, and we're closing around 18.9. So the lower the VIX goes, the more bullish the stock market becomes because the VIX is an indication of fear in the market. If fear is leaving the market, there's better chances the market's going to new all-time highs. So as long as the VIX continues to close below 20, we want to remain bullish on the market. We would need to see the VIX come all the way back up to about 24.7 before we would consider bearish scenarios and more potential corrections in this market. On gold, we're still slowly drifting up towards our price target, which is still up here at 1761. It does look like the price action and the trend are starting to slowly look bullish, so gold could be looking more and more bullish the longer it can stay above these moving averages and build up a bullish trend. We still got to get through our first price target and get back above the 50 EMA before we get overly bullish on gold. On silver, we hit that price target, and ever since we see weakness, and it looks like we're heading back down towards support at 25. Look for a bounce off support at 25 for a potential retest of the 50 EMA, which is now around $26. On Bitcoin, we're currently down almost 5%, and if you watched my weekend video, I am expecting to see Bitcoin go through a crash in the very near future. Now, when I say crash in Bitcoin, it's also just considered a correction in the crypto world, where 30 to 50% pullbacks are completely normal and to be expected if you've been in the crypto space. So remember that my price target on Bitcoin was up here at 62,500, which we did not hit that level because we only got up to about 61,700 before we started to sell off. So are we going through that correction in that crash right now, or do we have more upside to go? Well, if you look at the price action, we're currently below the 20 simple moving average, and the 5 EMA is looking like it wants to start coming down and crossing back below the 13 EMA. So we're slowly giving back some of that bullish energy, and we're slowly building up some bearish momentum. If I switch this over to a 1 hour chart, you can see that we're currently breaking out of this consolidation wedge and we're failing to hold up above support levels. So Bitcoin is essentially in free fall right now. And remember, just yesterday I said watch out for a potential crash in Bitcoin. This is 100% a technical crash and a technical correction, and it has nothing to do with fundamentals. So if you're trying to justify why Bitcoin should go higher with fundamentals or why it should go lower with fundamentals, I'm not interested in any of that. This is 100% technical, and Bitcoin strictly just needs to cool off before it can go any higher. Now, whether or not Bitcoin is cooling off right now or it's going to go higher before it sees that crash is to be determined. We're not going to get overly bearish on Bitcoin just because it's having one bad day. It's very possible that this completely recovers and we go back up to that price target at 62,500. However, the point I'm trying to make on Bitcoin is don't get overly bullish on it at these levels. There's very little upside for a huge potential downside. Therefore, the risk reward ratio is just not there on Bitcoin at this time. There's much better places to put your money than on something that has run up this much and needs a huge correction before it can go much higher. So right now it looks like Bitcoin could be heading back to the 50 EMA, which is right around $50,000. If that level fails to hold up as support, Bitcoin is going to see some waterfall selling and it's going to start getting very ugly very fast. Next up is Amazon, and we saw Amazon going up 1.17% today, and it looks like it's well on its way to retesting the 50 EMA price target at 31.50. That's a very strong resistance level, but if we do break and close over that level, it will start looking bullish for Amazon. Remember, we need price action closes back above the 50 to retest the price target up here at 32.20. Downside support is now 30.90 and 30.33. Next up is Tesla stock, and we saw Tesla going up 2.31% today, and Tesla is still closing below the 20 simple moving average and below the 50 EMA. We're still in a bear trend, so we don't want to be bullish on Tesla. Downside support levels to watch on Tesla are right here where it currently closed around 670, but if that level does fail to hold up, we're likely coming down to close the gap at 655. If that level fails to hold up, the next support level is down here at 618, and below there is 550. Remember on Tesla that it has bearish price action with bearish trending, so we don't want to be bullish on a stock that is in a downtrend with bearish price action. So right now, you're still better off being a Tesla bear than you are being a Tesla bull. Eventually, we will get out of this correction and we will start to head higher, but wait for the price action and the trend to confirm that we're going back into a bull market and don't leave it to guessing. Next up is Apple stock, and we saw Apple having a really good day today, going up 2.83%. We're closing back above the 20 simple moving average, but we're still closing below the 50 EMA, which is up here at 126. So I'm looking for Apple to retest the 50 EMA to see if that level is going to be resistance or if we can finally break and close back over that level. So upside price targets on Apple are at 126 and 127, with downside support at 123 and 120. On the financial sector, we continue to see weakness, going down 1.72% today, and that is a price action close back below the 20 simple moving average. Remember that the financials, industrials, and energy sector were doing really well during the tech correction, and now it looks like we're starting to see some selling in these sectors while the tech sector is doing better. So it looks like money could be leaving these sectors and going back into the tech sector. We're still on a bull trend, but we're starting to develop some bearish momentum, and we're closing below the 20 simple moving average. On the industrial sector, we went down 0.36% today, and that's 2 days in a row that we're closing below the 5 EMA. We're still in a very strong bull trend on the industrials, however, so it's not like we're getting bearish on the industrials just because we had 2 bad days in a row. On the energy sector, we went down 2% today, and we're closing well below the 20 simple moving average for 3 days in a row, and we're definitely getting some bearish trending. It looks like the energy sector is well on its way to retesting the 50 EMA right around $47. And then we have the healthcare sector, which is going up about 0.5% today, closing back above the 5 EMA and developing some bullish trending. So it shouldn't be a surprise that we're seeing weakness in some sectors and strength returning to others. This is how these sector rotations work, and that's why you never want to chase something that you missed. If you missed out on the move in financials and industrials and energy, and you're chasing it now, you're getting destroyed while the rotation is going back into healthcare and tech. So get into the flow of the market and get out of the habit of chasing and be more of a contrarian investor. Buy the stocks that are low and beaten up and then sell them when they go higher. Get in the habit of buying low and selling high, and you'll always be on the right side of the trade. So going back to the S&P 500, we can definitely see some weakness building up in the financials, industrials, and the energy sector, but they're still relatively strong and they're still in very strong bull markets, so I think they'll be just fine. We're seeing money leaving those sectors to go back into healthcare and technology, which is good news in the long term, because the S&P 500 is over 30% tech sector. So if we're seeing the tech sector go back into a bull market and maybe even possibly well on its way to new all-time highs, we should see the S&P 500 doing very well, even if we see the financials, industrials, and energy sector selling off. The tech sector is weighted far more heavily than those sectors, so a strong tech sector is still bullish for the S&P 500. It could be possible we see weakness in the Russell 2000 and the Dow Jones while we see the tech sector recovering, so make sure you're on the right side of the trade. Don't forget, on the Stocks Channel Discord, I'm constantly giving you updates intraday on exactly what the market's doing to help keep you on the right side of the trade. If you're interested in joining the Stocks Channel trading community, you can find out how to join by clicking on the link in the description of the video. Don't forget that the VIX is at some of the lowest levels that we've seen before the crash of 2020. So that means that fear is leaving this market, which does favor the bullish scenarios. So we still want to have a bullish bias in this market, and we're looking to buy off support levels and sell at resistance. All right, next up is our trade idea, which we're still following on this channel, which is Shopify. And we did see Shopify blasting through that first price target at 1130 and heading straight up to the 13 EMA at 1160. The next price target is around the 50 EMA, which is up here at 1200. And a break and close over 1200 brings us to our next price target at 1260. Downside support is now 1130 and 1111. So we'll keep following Shopify as our trade idea until we hit all of our price targets, and I'm going to help keep you on the right side of this trade the whole way through. If you're interested in more Stocks Channel trade ideas, I add more weekly to the Stocks Channel Discord. If you're interested in joining the Stocks Channel trading community, you can find out how to join the Discord server by clicking on the link in the description of the video. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.